Hey guys, it is Julie here with JT Wealth. In today's video, we are taking a look at 5 different LiDAR companies. So let's get into it. All right, guys, welcome back and thank you so much for being here. Like I said, today we are talking about LiDAR companies. Now, there has been a lot of momentum in this sector as EV markets are blowing up and companies are moving towards autonomous driving. So today we're going to take a look at 5 different LiDAR companies and their potential investment opportunities. Just before we get into all of that, this is your friendly reminder that if you enjoyed today's video, make sure you hit that like button and leave your thoughts in a comment down below. Also, don't forget to check out some of the links in our description, including a link to Webull right now, who is giving away 4 free stocks for signing up and funding a new investment account. So make sure to check them out. All right, now to start off, what exactly is LiDAR? LiDAR is short for light detection and ranging. You could also call it laser radar. In a nutshell, it's the technology of sensors and radar that help facilitate self-driving capabilities in vehicles. Now, LiDAR isn't the only option for those looking to build autonomous cars and trucks. For example, Tesla prefers computer vision, which utilizes cameras and AI rather than sensors. However, by and large, the automotive industry is focused on LiDAR-based self-driving. So the first LiDAR company we're taking a look at is Luminar Technologies. They trade under the ticker LAZR and are currently at $34 per share. Now, these guys just came public via a reverse merger through a special purpose acquisition company, Gores Metropolis, on December 3rd. Now, their shares first nearly doubled, close to $41.80 on December 8th, and then got cut back in the following week. Luminar does work with some well-known companies, including Volvo. And back in the spring, Volvo announced that it will be the first automaker to use LiDAR laser vision system to enable what it calls a fully autonomous highway driving car starting in 2022. And that news was the result of a deal with Luminar. Also, back in November, they struck a deal with Mobileye, which is an Intel company, to supply Luminar LiDAR for the company's autonomous vehicle series solution in its next phase of driverless car development and testing. Now, there was a bit of a hiccup with this deal lately when the Mobileye CEO said that in 2025, their self-driving cars could come out with in-house made LiDAR systems instead of the ones made by Luminar. Evidently, investors were dismayed by the statement, especially since only last month Luminar signed on the dotted line with Mobileye to supply LiDAR for its first-generation robotaxi. However, Northland analyst Gus Richard said it all amounts to a storm in a teacup. The 5-star analyst listed several reasons why Mobileye's statement should be taken with a grain of salt. Number 1, we do not believe an internal LiDAR system could be ready for 2025 production. Number 2, Laser will be the entrenched supplier to Mobileye by that time. Number 3, Intel is developing LiDAR, and we believe that Intel's SIP group has other priorities. And number 4, if Mobileye had an internal solution ready to go, they would not have announced a deal with Laser. He rates the stock a buy, and with a $41 price target, would be expecting about a 68% return over the next year. But not everyone agrees. Some think that Luminar may be overvalued right now, and that there is another better LiDAR pick out there. And that could be Velodyne LiDAR. Velodyne trades under the ticker VLDR and is currently at $22.82 per share. They also recently went public on September 18th via a reverse merger with a SPAC. In this article, the author says that Velodyne is a better stock to consider for 2 big reasons. First, its technology is extremely competitive, and second, and crucially, it's already doing business with most of the world's automakers. Big automakers favor suppliers they know and trust, and even though LiDAR is still an emerging technology in autos, Velodyne has already earned that trust. The company has proven that it can deliver automotive-grade products on time and on budget over and over, and no other LiDAR maker can best Velodyne's track record to date. This article says Velodyne is primed to lead in the age of autonomy. Not only does Velodyne already count most of the world's big automakers as clients, they're finding more and more customers in other industries like robotics too. And both Ford Motor Company and Chinese search engine giant Baidu invested in Velodyne way back in 2016. Both still hold sizable stakes today, and of course, both are among Velodyne's larger customers. In addition, the VLDR stock is less risky than undiversified automobile LiDAR makers, as Velodyne is developing sensors for autonomous robots. In fact, their Velobit, their 3D LiDAR sensor for robots, recently was named the winner of the 2020 Innovation Award by Silicon Valley Robotics. The company is trading with a market capitalization of $3.4 billion. The VLDR stock is relatively cheap for the company that's arguably the first mover in the fast-growing LiDAR space. Analyst Gill anticipates further adoption in the non-automotive applications, such as warehousing, mapping, urban security, and smart city will generate over 50% of their sales. To this end, he rates the Velodyne stock a buy, along with a $30 price target for about a 25% potential upside. So Velodyne certainly seems to be in a strong position with their already well-established customer base with some pretty big names. The third company is probably a little less well known, and that is the French company Valeo SA. They are under the ticker VLEEY and are on the over-the-counter market at the current share price of $19.60. Valeo has been working on solutions to speed up the development of more autonomous vehicles since 2004. They're a global leader in driving assistance sensors, and the group is currently the only company in the world to series produce the LiDAR laser scanner for the automotive industry. Now, they delivered the world's first ultrasonic sensors for parking maneuvers back in 1991. And today, Valeo has the automotive industry's widest and most comprehensive range of sensors, including ultrasonic, cameras, radar, and LiDAR systems. Valeo expects to produce 1 billion sensors in the next 5 years, after producing its first billion in just over a quarter of a century between 1991 and 2017. Valeo operates worldwide in 33 different countries with almost 115,000 employees and 15 distribution platforms. Valeo is reportedly the only company in the automotive world that is mass-producing LiDAR sensors. 4 of the world's leading automakers have already signed commercial contracts for it, and Valeo's order book currently stands at close to €500 million. They have developed relatively affordable LiDAR, and with increased auto demand in Europe, Valeo is identified as a key beneficiary of the proliferation of electric vehicles. Now, the next 2 companies on our list are both SPACs who have not yet completed their merger, starting off with Collective Growth Corporation. They trade under the ticker CGRO and are currently at $14.29 per share. And they are set to merge with Innovyze Technologies, who makes LiDAR sensor systems used in automotive applications, as well as other uses in drones and logistics. In addition to the hardware, it will soon also offer perception software that provides additional data to the vehicles. Innovyze recently agreed to sell its LiDAR to BMW for use in its 2021 SUV. Importantly, Innovyze recently announced that it released a cheaper LiDAR system for more feasible mass-market automobiles. Indeed, the company claims its technology is some of the most cost-effective for automakers on the market. In 2025, Innovyze predicts gross margin will reach 52%, with its operating margin hitting 31%. The valuation of the CGRO stock is expected to be $1.4 billion after the merger, and this will make Innovyze one of the cheaper LiDAR plays. The SPAC deal is expected to provide about $350 million in gross proceeds to Innovyze, and if all goes well, should close in the first quarter of 2021. And last, but certainly not least, is Colonnade Acquisition Corp. They trade under the ticker CLA and are currently at $13.50 per share. And they will be merging with LiDAR company Ouster. Ouster sees its digital LiDAR technology as having practical applications beyond autonomous vehicles and extending to areas such as drones, smart cities, and robotics. The vision of the future that we're pushing towards is LiDAR on every vehicle on Earth, every moving object on Earth, and every piece of intelligent fixed infrastructure on Earth, in the same way that camera technology has propagated and become ubiquitous in the last 20 years, said Chief Executive Angus Pacala. The reverse merger is expected to close in the first half of 2021. Now, Ouster, which expects to generate around $19 million in revenue in 2020, stood out from other companies in the space that Colonnade had looked at because it's a business that's already generating revenue. So it's not a business plan. They're selling real products to real customers right now. In fact, they have over 450 customers in 2020 and are highly diversified across different markets, including industrial, robotics, smart infra, and automotive. Ouster will be valued between 1.6 and 1.9 billion approximately, and their private investment in public equity will give the company about 100 million to work with after the merger is complete. So there we have 5 different LiDAR-related companies, all within varying levels of progression within their business. Hopefully this video gives you a few different ideas as to where to jumpstart your research into LiDAR investing. Of course, these videos are never a suggestion to buy or sell any specific stock and are just meant for information and entertainment purposes, so always make sure you are doing your own research and due diligence before making any investment decision.